Gold has touched a new record high. It has surged past the $2,700 mark for the first time, performing the best in the last 14 years. But what is causing this yellow metal to really soar? Is the faith in gold as a safe haven really coming back? To weigh in on that, we are joined by Geoff, who's the independent emerging markets commentator. Hi, Geoff. Thank you so much for taking the time out and joining us today.
Thank you.
Geoff, tell us, gold has raised past the $2,700 mark for the first time. This is the highest ever return in the last 14 years. Now, a couple of factors that are playing, the expectations are driven by the monetary policy easing, gold as a safe haven due to demand uncertainty, or the tensions that are happening in the Middle East. The markets continue to look towards the geopolitical tensions, and the overnight development in the Middle East continues to fan, the flames of uncertainty. Can the gold prices inch higher going further?
I think they probably can for a while. I think the point you've not mentioned, which I think is also very important for the gold price, is the fact that we're getting a lot of warnings now, most recently from the IMF, about the fiscal situation, the debt situation with so many countries around the world. And I think that's a very timely warning in the face of the upcoming US election, which of course is less than 3 weeks away now, when both the Democrats and the Republicans, Trump and Kamala Harris, have got major fiscal expansions in their plans, Trump more than Harris, to be fair. And so I think there is a concern here that the safe haven characteristic of gold may be needed also vis-a-vis rising fiscal deficits, rising debt, as well as the point you mentioned, which is the little bit of uptick in inflation fears over the last couple of weeks or so, and of course the situation in the Middle East.
So, Mr. Dennis, do you see a gold touching $2,940 per ounce? Because that's what the international brokerages are penciling in. They're very, very bullish on gold prices. Is that the level that you see it touching probably by the end of this year?
I think it's very likely. I don't particularly have a target for gold. I don't really have the resources to do that, so to speak. But I think what I'm trying to say is I think the factors that are driving the gold price up do not look to me as if they're going to go away anytime soon. We've got to wait to see what the outcome of the US election is. It's probably going to take a few more months before we see whether the US inflation number is going to continue to fall. Obviously, we've seen some robust economic data recently. And I think another point, which is a structural factor that I should mention here, is central banks are buying gold as well as private individuals presumably pushing up the price, and the central banks as well. Because what the central banks are doing here is they're saying, maybe I want more gold in my reserves in the face of all this fiscal expansion, particularly in the US perhaps, which could eventually bring the dollar down, which is my view that it will bring ultimately the dollar down, although the dollar's strong at the moment. So you've got all these factors driving the price of gold. And frankly, I don't see any of them, except possibly softening US inflation numbers in the next month or two. I don't see any of them changing in the near term. And therefore, I think another push up in gold is probably quite likely, but I don't particularly have a target. But if I was a gold holder, I may take a bit of profits here, but I wouldn't sell out completely because I think the upside drivers, most of them are going to be there for a while longer.
Right. Couple of things that you mentioned there. One is the strong demand coming by the central banks. In fact, strong demand coming from central banks globally as far as the debt situation is also concerned. There's also dovish stances adopted by major central banks on the rate cuts. Going ahead, are these factors also going to play a lot on the gold prices? And then we'll come to, of course, the individual the buying that's coming in from the retail investors as well.
Yeah, I think we can take the retail buying of gold by investors as a given. We can move on from that. I think in terms of central banks, I don't think this is to do with investors buying gold because they are concerned that central banks are getting too dovish, because we don't know that. I mean, inflation in the euro area has come down sharply. It's come down sharply in the UK. It remains basically at zero or close to zero in Japan. So I think the inflation numbers are really only a bit of an issue right now in the US, given the strength of some of the economic data. So I don't believe central banks are being overly dovish here. In fact, on the contrary, I think in the US, for example, where inflation's come down a long way, you've now got rising real interest rates. So I think the dovish central banks may be playing a partial role, but I don't see this as being a major role. My concern more is that you've had all this talk for month after month after month that central banks are going to shift their reserves away from the dollar. They're concerned about the dollar, and rightly so, in my view, given where US debt numbers are going, over 100% of GDP pretty shortly, deficits around 6% of GDP, and therefore they probably want to diversify their reserves away from the dollar. I don't think the Chinese renminbi is remotely convertible enough and broadly enough held to act as a good reserve currency. The euro is probably not strong enough. So people are going to go, central banks are going to go to gold. I think it's more that long-term structural factor rather than central banks and investors saying, look, I'm concerned how dovish the central banks are being about monetary policy, because I think that's debatable. I'm not sure they are being overly dovish.
Right. Finally, Mr. Dennis, the investor who has missed the bus, who's missed the rally, how can they look at gold? Can gold be still looked at as a good hedge? Is it still a good hedge given the escalating geopolitical tensions or the volatility in the market at this point? Because not much of a profit booking is coming right now, even though it could. How does one play gold right now as an investor?
It's an interesting question because, of course, gold is rallying now, even though the stock markets worldwide are strong, generally pretty strong, especially in the US. Emerging markets are up now nearly 13% on the year. India's up over 20. China is suddenly obviously moving, as we've discussed on the program before. So I think that it's unusual to get equities doing as well as they're doing, with gold doing as well. So the safe haven element is not vis-a-vis a soft equity market. It's very much vis-a-vis inflation risk, bond market risk, therefore, in geopolitics, possibly dollar risk. If I were not in the market and was looking at what was going on now, I might wait for a pause. I might wait for a modest pullback on a couple of day basis, and then I'll put some money in, because I doubt, and I'm not a gold expert, I'm just looking at the factors driving it. I think that I doubt very much if this rally is over, frankly, because as far as I'm concerned, and I'm a fundamental guy, so to speak. Now, if you look at the fundamentals, as I say, nothing here seems to me to be about to change, with the possible exception of US inflation numbers getting better again over the next few weeks. But the Middle East is going to be hard to solve. The desire of the central banks to hold other than dollars is not going to change. And those sort of factors, I think, are very, very important, and I'm not sure they're going away at the moment.
Right, Mr. Dennis, thank you so much for joining us today and weighing in on the gold prices. Thank you so much.
Thank you.